If y'all are in this GME trade, you know how crazy of a week it's been. Some people, like this one guy on Reddit called Deep Fucking Valley, he has turned $700,000 into $30 million. So clearly the people have spoken, and the verdict is, we like the stock. But besides people making millions off of the trade on GameStop, what else has happened this week to GameStop? It's been a wild ride, and here I am to tell you exactly what happened this week. What is up, you guys? This is Alice. Welcome back to Money with Alice, where we talk about all things personal finance, investing, and so much more. If you haven't already, make sure to smash that like button because it really supports my channel and it really helps with the YouTube algorithm. I also heard that the number of likes on this video corresponds to how much we think that GameStop will be worth next week. So if you think that GameStop's gonna be worth a lot, smash that like button. So continuing on with this crazy saga that is GameStop, a lot of things have happened since the last time I posted. If you haven't checked out that video, I'll link it somewhere up here. Today, we're gonna discuss what else happened for the rest of the week, featuring Robinhood getting sued and Wallstreetbets Discord channel getting shut down. Make sure to check out part 1 of this video to understand exactly what is happening in terms of the market mechanics behind this GameStop trade. All right, first, let's give a quick update on how GameStop is doing. Last time we talked in this video, the price for GameStop was at around $250. Now it's around $320, so it's gone up a little bit. Just to put this into context, in the last month alone, the stock price has been trading as low as $19 to as high as $400. In the last 5 days, there's been a lot of development on the stock price and a lot of stock price movement. In the last 5 days alone, the stock price has been trading as high as $480 at one point and as low as $230 at one point. So why has the stock moved so much in the last 5 days? Let's dissect the situation a little bit more. The situation has been changing and developing daily, but here's what we know so far. On Thursday, GameStop price had a huge decline. The stock price declined by 50%. So why did that happen, you may ask? Well, here's what happened. On Thursday morning, a bunch of brokerage accounts, including Robinhood, E-Trade, Interactive Brokers, all decided to release a statement restricting buyers and investors from actually buying more shares in GameStop. They said that the investors could only hold their GameStop position or sell, but they couldn't buy any more GameStop shares. Robinhood's official statement said that the reason they stopped investors from buying any more shares in GameStop is because there was a lot of market volatility. Now, to me, that is a super vague statement and a super vague response on the reason why, of all stocks, they decided that GameStop wasn't one to restrict. To add on to this situation, the Wallstreetbets Discord channel has also been shut down on Thursday, in addition to the Robinhood stock accounts restricting investors from buying more shares of GameStop. The reason that Discord gave for banning the Wallstreetbets channel was because there was a lot of hate speech and discriminatory phrases. But most people are describing GameStop, so it's a very vague reason to why the Discord channel got banned. But here's the kicker. On Thursday, the people have spoken and the people responded. Robinhood was hit with a class action lawsuit from the investors who were restricted from buying in GameStop. The lawsuit claims that Robinhood is rigging the market by preventing its customers from buying into GameStop. Robinhood's motto is "let the people trade." Restricting people from buying shares doesn't seem to be very in line with what their motto is saying. The Reddit community also stood up against Robinhood. There was a new subreddit created called Class Action Robinhood, where over 31,000 users have signed up petitioning against Robinhood. There's also been rumors that there's a movement happening where people are getting off of Robinhood and boycotting Robinhood altogether. With the people strongly behind the GameStop movement and people filing class action lawsuits against Robinhood, Robinhood got spooked. So what did they do? Well, on Friday, literally the day after they made the decision to ban all buyers from buying GameStop, they reversed that decision. They said that now they're going to allow investors to buy on a limited basis into GameStop shares. So by Friday on midday, you'll see that the stock price in response for GameStop rose up 60%. Accounting for the 60% for the year, just for 2021, the stock price is up 1,600%. So all that action, Robinhood banning investors from buying GameStop shares, Robinhood getting a class action lawsuit, all of that happened within the course of 48 hours. Crazy, am I right? So why did Robinhood decide to restrict trading? There's a couple more angles to the story and a couple possibilities, so let's unpack the story a little bit more. One potential reason is that Robinhood could have been running out of money. So you might think, how can Robinhood be running out of money, right? They have a lot of investors on their client base and they're getting pretty good revenue probably from all the trading activity that's been happening. Well, for the brokerage accounts usually has a little bit of time lag between when investors like us put in the money, when we wire our money from a bank account to the brokerage account, and when the brokerage actually receives that money. So between when the money actually hits Robinhood's account and when we wired it, during that time we can still actually buy and sell shares for the most part. But sometimes you'll see a line item called money to be settled, and that is the amount of money that we've wired to Robinhood that Robinhood hasn't received in their account yet. There's a depository for all the US stock market called DTCC. And this depository you can think of as the central hub for the entire stock market. And they control how much collateral or how much additional backup cash and additional backup assets that the brokerage accounts have to put up in exchange for the trading volume that is happening. The DTCC requires that brokerage accounts like Robinhood have a certain amount of reserve or certain amount of cash set aside in case things go badly and maybe Robinhood goes out of business, then the entire financial system doesn't just collapse. This is similar to how banks have a reserve requirement in order to make sure that there isn't a bank run. Similar to that, brokerage accounts like Robinhood have to keep up an amount called collateral in order to make sure that they have a lot of liquidity to back up the trading volume. But when the stock price for GameStop rose so quickly, DTCC, the central hub, decided that because GameStop has been rising so much due to market volatility, that Robinhood had to put up more collateral. But the issue is, right, when we wired that money, Robinhood hasn't gotten that money yet. So what they did instead was they draw down their credit lines. So what's a credit line, you may ask? Well, the credit line is sort of like a big corporation's credit card. For us, we have a credit card that we can just put in our purchases and then we'll pay month end, right? Well, the credit facility is similar in that case. For credit facilities, companies can put a lot of money on their credit facilities and they can pay it back in the future. So this is like a big credit card for the companies. They have a credit limit similar to how our credit cards work. So Robinhood has a $500 million credit facility. In response to the DTCC asking for an increased collateral, what Robinhood did in that case was draw down their entire credit facility. They actually maxed out their credit facility. They basically maxed out their credit limit. Since Robinhood was running out of money, potentially this was why they decided to restrict buying of shares in GameStop to make sure that they have enough money to float themselves or to wait until they get more cash before they allow trading to happen. So that's one possibility. Now, another reason why potentially Robinhood decided to restrict its trading for buying activities in GameStop could be due to a conflict of interest. So what is this conflict of interest? Well, Robinhood actually does a lot of business with Citadel. Now, Citadel is one of the biggest hedge funds out there. Citadel, for a reminder, is also part of the parties that decided to help and buy out Melvin Capital. This is a guy that has a lot of short positions and is drowning because of the GameStop trade. Citadel, one of the largest hedge funds out there, is a key client for Robinhood. In fact, as of June this year, Robinhood has made $39 million from Citadel, representing 35% of their total revenue. So 35% of a total revenue is a huge chunk to have from one customer. The way that Robinhood was making money from Citadel is that Robinhood was selling information about what its clients are doing in terms of buying and selling activities to Citadel. In response, Citadel is paying for that information and that market intel. So is there a possibility that Citadel, who is very invested in Melvin Capital, who is losing and hemorrhaging millions of dollars from this GameStop trade, maybe talk to Robinhood and ask Robinhood to prevent its investors from driving up the stock price even more so that Melvin Capital won't continue hemorrhaging even more money than they already have? Possibly. I think the relationship between Robinhood and Citadel is definitely a point to question here. Ultimately, no one really knows exactly why Robinhood decided to stop investors from buying more shares in GameStop, but these are a couple possibilities. They're either running out of money or Citadel might have told them something, or a combination of the two, or there could be other theories, but here's the two most likely. So what's next for GameStop? Well, as of Friday, a lot of brokerage accounts, including Robinhood, have resumed investors to allow them to trade and continue to buy in GameStop. So the stock price on Friday for GameStop shot up. There's been screen caps from people saying that on Thursday at some point, they were able to fulfill their sell orders in their positions in GameStop at $2,700. Now, we're not really sure how valid this is, but could there be a possibility that at some point in the near future, GameStop could reach actually $2,700? Possibly. Let's take a look at the facts and the key stats that we need to monitor. Okay, short interest. So short interest, if you haven't seen my last video, quick blurb about this. Basically, this measures how bullish or how bearish, meaning that how optimistic or how much people think that the stock price will go down. Looking at the short interest last time, 140% short interest was the number we were looking at. This meant that of the amount of shares that were available for the stock, 140% of that was represented in short positions. So people were pretty negative on this. Now, as this position moves down, we should see that the stock price moves up. So how did the short interest ratio move since last time? Well, compared to last time, it's now only down 8%. So compared to the 140% short interest, it's only down 8%. So that's not a lot at all. Meaning that if the short interest number should continue to go down as these hedge funds are covering their short positions, we should continue to see the stock price to rise up. Additionally, it'll take some time for the hedge funds to cover their short positions or to close out the short positions because they're restricted based on how much market volume or how much daily volume is actually traded in GameStop. Since they have such a large short position for the most part, it'll take a really long time for them to actually buy back the shares and actually be able to close out their orders completely. So you should probably see that they're closing out their short positions in the course of 1 to 2 weeks rather than it all being one single day, which means that in the near term, this should continue to drive up the stock price. Let's get a quick update on how the hedge funds are doing. Starting with Point72, this is one of the hedge funds that is buying out Melvin Capital. This is a $19 billion hedge fund. So far from GameStop, it's lost about 15% this year. Another hedge fund in this GameStop short is called D1 Capital. They have $20 billion managed, and so far they've lost about 20% of their returns this year due to GameStop. And last but not least, Melvin Capital, this is the guy that has a bunch of short positions on GameStop, has lost over 50% due to this GameStop short position. So what you can see here is that the short sellers, especially the hedge funds, have been losing a bunch of money from this GameStop trade. They're definitely hurting, but how long are they going to hold out their short positions before they just cut their losses and cover their short positions? All right, so what should we expect next for GameStop? If you're still in on this GameStop trade, or if you're looking to get in on this position, here's a couple pointers that I would recommend watching and a couple data points that I would recommend monitoring as you're figuring out when to buy and when to sell. First is the short interest. The short interest number is super important. However much short interest is out there is how much of the short sellers are still in this short position. As the short interest goes down, the stock price should rise. But once the short interest amount is low enough, that means that there's not much additional appreciation on the stock price unless you fundamentally believe in the performance of GameStop as a company. Once they've covered most of their short positions, the appreciation due to short interest will significantly decline. So start thinking about what you're going to do when they've covered a good amount of their shorts. A second point that could really move the stock price on GameStop is government intervention. The Securities and Exchange Commission, the SEC, this is a central government entity that is monitoring all financial activities, stock markets, bank, etc., etc. So this is like the big guns. Now, they have released a statement saying that they're very closely following this GameStop and market volatility situation. So if there's any sort of government intervention, expect that GameStop price will correspondingly reflect any sort of actions that may happen due to the SEC. If the government shuts down any trading activity on GameStop, this could really hurt the stock price. Definitely something to monitor if you're thinking about buying or if you're currently in this position. Ultimately though, no one has a crystal ball and no one can predict 100% what happens, but these are the key points to monitor as you're thinking about your exit strategy or your entry strategy. Also, understand that this is an investment, right? As you're putting this money in, there's a potential you could make millions off of this trade, but there's also potential you may not get your money back. So don't put in more than what you're comfortable losing. All right, guys, so that about it sums it up for what's been happening in the last 2 days. I hope you guys found this helpful, and I hope that you have learned a lot of information about how to watch out and how to play GameStop for the next couple of days or next couple of weeks. Definitely watch out for the short interest number. Definitely watch out for any government interventions. And also,
don't take on more risk than you can afford to lose.
This situation, again, is kind of crazy. 2021 literally just started, and so many things have already happened. If you enjoyed this video, please give it a like down there, and also make sure to hit that subscribe so you don't miss out any future videos from me, because I could be posting another one on GameStop and you don't want to miss that. Talk soon, and in the meanwhile, for those of you who are looking to get into GME or are holding on to GameStop, I hope that you will send GME to the moon.